Understanding home reversion plans. A home reversion plan is a financial product. It lets you get money from the value of your house. This type of plan is most often used by older people in the UK. They must own their home to be able to use it. The plan works by selling a part of your property or all of it to a specialist company. In exchange for this sale, you receive a single lump sum of cash. You might also receive smaller, regular payments over time. A key feature is that you keep the right to live in your home for the rest of your life. This is called a lifetime tenancy. This essay will explain the risks and the benefits of these plans for UK homeowners. It is important to understand both sides before you make any decisions about your property and your future financial security. It is for people who have a lot of wealth tied up in their property, but need cash to live on. For example, you might need money for home repairs, to pay off debts, or just to have a more comfortable retirement. The company that buys your home, or a share of it, becomes the new legal owner of that portion. You become a tenant. The agreement is legally binding. It sets out the terms and conditions of your right to stay. It is a form of equity release. Equity is the value of your home minus any mortgage or loans secured on it. One of the biggest risks is about the money you get. The amount of cash you receive will not be the true market value of the share you sell. Companies offer a discounted price. This is because they have to wait many years before they can sell the property and get their money back. You might sell 50% of your home, which is worth £150,000, but only receive £50,000 in cash. The lump sum you get is often much less than you would get from selling the house normally. This immediate financial loss is a core part of how these plans are structured and must be accepted if you proceed. It is a trade-off for getting the cash now while being able to stay in your home. Another major risk is losing out on future house price growth. Once you sell a portion of your home, you lose all rights to any future increase in its value for that portion. If house prices in your area go up a lot over the years, that financial gain will go to the reversion company, not to you or your family. For example, if you sell 100% of your home, it does not matter if its value doubles or triples in the future. You will not see any of that benefit. This can be a very significant loss over a long period. In a rising property market, this means the company gets a much bigger profit when the plan eventually ends. The plan can also be very costly if you pass away soon after taking it out. The company has paid you a discounted sum based on an estimate of your life expectancy. If you die earlier than they expected, the deal becomes very poor value for money for your estate. The company gets to sell the property much sooner than planned, making a large and quick profit from the arrangement. In the past, this situation could be made worse. Some people use the cash to buy an annuity, which provides a regular income for life. If that annuity did not have a guarantee period, the payments would stop on death, meaning all the money would be lost. Finally, there are risks that affect your lifestyle and other finances. Moving house can become very difficult. While some plans allow you to move, there are strict conditions. If you want to move to a smaller, cheaper home, you might have to pay back some of the money. The company might also not agree to a move to certain types of properties like sheltered accommodation, because they are harder to sell later. Getting a large cash sum could also affect your eligibility for some state benefits, pension credit, council tax support. You could find that your income from the state is reduced. Also, any money you spend on improving your home will not benefit you financially. That extra value goes straight to the company. Despite the risks, there are clear benefits that make these plans suitable for some people. A significant advantage is that you may not have to pay any monthly rent. Once the sale is complete, you receive your money and are granted a lifetime tenancy. Use the cash for your needs without budgeting for rent. This can provide great peace of mind. Use the money to clear outstanding debts, help family members financially, and fund a more comfortable retirement lifestyle without a new monthly outgoing. Compared to lifetime mortgages, reversion plans often let you release a larger sum of cash. Reversion plans are sales, so providers may offer a higher cash amount upfront, useful for large one-off expenses. These plans also offer flexibility through part reversion. You do not have to sell your entire home. You can sell 25%, you can sell 50%. Unlock some cash now while keeping ownership of the rest. If your home's value rises, the part you keep will increase too. That could allow further part reversions later, releasing more cash. Selling only a part lets you leave a known percentage to your heirs, a useful tool for estate planning and certainty for beneficiaries. One possible benefit relates to inheritance tax. When you sell a share of your property to the reversion company, that share is no longer part of your estate for legal and tax purposes. In the UK, inheritance tax may be due if the value of your estate is above a certain threshold when you die. Reducing your estate might reduce or eliminate the bill. However, the part of the property you sell is gone from your estate forever. Your beneficiaries will not inherit it. If you sell 100% of your home, your family will receive nothing from its value when you pass away. Even with a part reversion, they will only receive the value of the share you kept. This is a critical point to discuss with your family. Setting up a home reversion plan involves paying for legal advice and a property valuation. These fees can add up to several £1,000s and are often upfront. A home reversion plan is a permanent decision that is very difficult and expensive to undo. Before you take any action, it is absolutely essential to get independent financial advice from a qualified professional who specializes in equity release. They will ensure you understand all the risks and benefits before you commit.